I call this meeting of the Pearland Independent School District Board of Trustees to order on October 25th, 2017 at 3:04 p.m. Let the record show that a quorum of board members is present, that this meeting has been duly called, and the notice of this meeting has been posted in accordance with the Texas Open Meetings Act, Texas Government Code, Chapter 551. Let the record show that trustees Beegler, Murphy, Gooden, Floyd, Botkin, and Decker are all present. Okay.
Madam President, do you want to just begin by having our auditor present his findings?
Yes, that would be fantastic.
Sir, if you'd come.
Appreciate you having a special meeting just for me.
Just
Feel
for
special.
you.
Thank you so much. My name's Kevin Cadenhead. I'm a partner with Kennemer Masters in Lunsford. We're the outside auditors, as most of you know. Apologize for my voice and if I cough a couple of times. I think I'm at the end of this, so I think you're far enough away from me as well. I'm going to talk a little bit about how the audit went, and then we'll go into the actual audit report. I'll point you to a few things that are of importance, and we do have some unique items in the financial statements this year. They're not issues, they're just unique items this year, so I want to point those out to you as well. Is that good? Can you hear me?
Yeah.
Okay. First off, an audit is not fun. So the best that you can have happen in an audit is the auditor shows up, he has a plan, the plan is executed, and the auditor then goes away. And that's exactly what we had happen here is we had a plan, we were able to execute that plan, we did not have any issues that caused us to have to do additional or extra work or to veer off of the plan. We had the pleasure this year of working with Georgiani and being new in the position. Our staff is experienced, and so as we would have expected, things flowed very smoothly with the change there. And so just wanted to let you know that from our standpoint, we had no audit issues per se that we need to communicate to you, the board. There were two very minor items which we included in a letter to management as just small improvement opportunities, but nothing that really warrants any, definitely no discussion with the board about any issues, as there were none. We also did perform compliance for single audit with federal program spending, and we found that to be in complete compliance, and I'll show you the letters in the audit there as well. So happy to report, as usual, very thorough audit, no stone unturned, so to speak, in regards to the scope of the financial audit, but no issues to report to you, board members. So with that said, I'd like to just flip into the audit for a minute. If you'll go behind the first tab, it says introductory section. Actually, it's behind the second tab, financial section. And you'll see our independent auditor's report. This is our auditor's report on the financial statements. The top of page 12 is where the actual opinion is. A lot of information there, but basically in that opinion paragraph, it says that the financial statements referred to above present fairly, and that is language to basically let you know, or the reader know of the financial statements, that the auditor has audited the financial statements and there's nothing else you need to know. What you're about to read is accurate. So there's no exceptions, except fors, or anything there. This is what's called an unmodified opinion, or a clean opinion is what sometimes you hear it's referred to. A lot of other language there that describes who has responsibility for what, but in that one paragraph is the actual opinion. Beginning on page 15 is what's termed management's discussion and analysis. This is a predecessory section to the financial statements that gives a little bit of basis for the financial statements and some analytical information. In the financial highlights, it talks about what the net position is and what fund balance is. We'll go into that a little bit more as we flip into the financial statements. This section is really good for providing comparison to the prior year. So on page 17, as an example, you can see the balance sheet on a full accrual basis is compared from June 30, 17 to June 30, 16. Normally when I read financial statements, just one person's way of doing it is anytime I get to a financial statement, I immediately go to the bottom right-hand corner. And in this case, that's what I would do, because I can look at what the total net position is to start with, and then I work my way up, and I can see that the unrestricted net position was $17.1 million in the prior year, $12.1 million at the end of the current year. Net position in this case you could think of as equity. It is equity. The next page, page 19, this is a comparative income statement. Again, bottom right-hand corner, work your way up a little bit, you see increase in net position, more commonly known as net income. Very consistent, 5.5 million current year, 5.7 million in the prior year. Additional information, won't go over it all in management discussion analysis. If you would turn to page 27, this is where the financial statements actually start. I just want to remind you or let you know, if you're not familiar with governmental financial statements, the financial report of all governments primarily contains two financial statements, two sets of financial statements. This is what, first statement is what's referred to as the government-wide financial statements, or more commonly termed full accrual, in that it includes all the fixed assets and all the glorious debt of the district on the financial statement. So again, bottom right-hand corner, this information we've seen before, total net position or equity, 76.66 million, of which 12.1 million is unrestricted. Page 28 is the full accrual income statement. And then again, just to have an understanding of how these statements are laid out, the governmental financial statement, in a weird way, starts off with expenditures. And then in columns 3, 4, and 5, you get revenues that are related to those expenditures. And then you get general revenues at the bottom. Again, change in net position near the bottom of that statement, 5.5 million. So that's the net income. So those two pages represent one set of financial statements. Starting on page 29 is the second set of financial statements, which are on a fund basis. Now, these financial statements are basically on the basis by which the district is managed. This is how you budget. How much do we have in fund balance? Or do we budget for every revenue and every expenditure? They do not include fixed assets and long-term debt. Those expenditures are shown as revenue or expense when incurred. So again, I go to the bottom right-hand corner, looking for fund balance, and I see that we've got 73.1 million of fund balance. Moving up a little, I can see that of that, 26.3 million is unassigned or readily available. It's not been committed or restricted or assigned to any specific function. Now, one of the things that I do when I look at fund balance is also look at the expenditures that relate to that fund balance to see how much do we actually have in fund balance, and it's between 2 and 3 months of your general fund expenditures do you currently have in the unassigned. Now, is that good or is that bad? I think in a school district's case, there is a schedule in here that shows if you have excess fund balance, you do not. You have actually a deficit fund balance. That's something that the TEA or the state's requiring you to submit each year. And I would just suffice it to say that none of the districts that I work with have excess fund balance. We can go into that into more detail, but my point being, your fund balance is fine. It's not too high, it's not too low.
Well, and let me add to that, we purposely assign portions of our fund balance because we do not want the state at some future legislative session to, and they contemplate doing this from time to time, take what they consider excess fund balance against state aid. So we, by our way of calculating, we have more than 90 days of fund balance, but we call certain things restricted in order to not give the state a greedy eye towards it.
Thanks for saying that, Dr. Kelly. I didn't want to bring that up, but that is the case in almost every district in the state. And you can see that there, $13 million. Assignment is just the district's ability to say, hey, this is not free and clear to use for whatever. We have an idea of what we're going to use it for. So thank you for that. The statement of revenues, expenditures, and changes in fund balance on page 32 is the fund financial statement, the fund income statement. So again, the bottom right-hand corner on page 33, tells me that the net change in fund balance was a minus 10.5 million. And so I worked my way across to see where that's occurring, and it's in the capital projects fund. So here we get to the first unique item that I want to mention to you that you don't normally see in this district's financial statements. We had a timing occurrence at the end of the year, June 30th, wherein the capital project for which the bonds were issued started to spend. However, the bonds did not actually issue until 6 days after the end of the year. So we ended up with a negative fund balance in the capital projects fund, which is primarily made up of bills that had been received, accounts payable, that had not been paid yet. Okay, so that's a unique thing. And there was 11.9 million of fund balance from prior capital projects that was spent during the current year prior to that bond being issued.
And if you
Which
remember,
page
guys,
are you on, sir?
I'm sorry, Charles. If
Page 33.
If you remember, guys, y'all passed a motion at some point early in the year that essentially allowed you to make expenditures that would be later reimbursed by bond
Bonds,
proceeds.
yes.
And
Yeah.
as he's saying, that happened after the fiscal year ended.
Yeah,
we
it's
reported
perfectly
that
okay.
we
There's
used
no,
one,
it's not
yeah.
an issue, it just is.
Right.
Yeah. Okay. So that's unique. You don't normally see that. And so in general fund, you can see that you were positive. In debt service fund, we had a positive net income. I promise you I'm not going to go over every financial statement. The notes start on page 41. A lot of detail in the notes. One note that I want to point to you specifically is a second unique item. We'll find it. Page 54. There had been some discussion for maybe 1 year prior and then in last year about campus activity funds versus student activity funds, and really working to get clarity on which was which. A campus activity fund being a fund in which the funds belong to the district. They're on the district's financial statements. A student activity fund being one in which the district is actually the fiduciary of, but do not own those funds. Those funds belong to the student activity groups. So in doing that, we determined, the district really determined that prior through Don Marshall and his office, that there was right over $3 million that we were classifying as student activity funds, which were really campus activity funds. So the way that we corrected that was to basically go in to fund balance on campus activity funds and on the full accrual statements into equity and put that $3 million where it belongs, okay? Because prior to that, it was not being reported in the financial statements. Again, that's not an issue. It's actually a clarifying financial reporting. It makes your financial reporting better and accurate in this case as it relates to campus activity funds. So you're going to see the word restated in a few places, and that's specifically what it refers to, the beginning fund balance for the campus activity funds. Fixed assets and debt are in detail in the notes. Won't go over those. I will just let you know that on page 75, there is a note called Evaluation of Subsequent Events, where we do describe the bond proceeds that were received on July 6th. So there'd be no question about the negative fund balance and how that's going to be cured, and it's all there. The bonds are there.
Can I ask you what the, just to clarify what the deferred inflow of resources is? Is that title funding or is that taxes or neither?
Specifically, there's a lot of things in deferred inflows of resources. If you want to look on page 71.
Well, if we go back to 17, the overall net position, last fiscal year, we had 7.5 million in deferred inflow of resources. So that's why I was curious what that exactly was.
There are several things that go into deferred inflows of resources. Primarily, they are changes in the net pension obligation. And we can go into a lot of detail about that, but basically the accounting is, there's several factors that go into net pension obligation and determining what that is, and it's an actuarial-based calculation. I'm just going to name off a few. There's expectancy of life There's the
Right.
actual compensation that's being earned currently, all these different things.
Okay.
There's the rate of return on investment. There's different things that actuary puts in there. Each year they redo that calculation.
Okay.
And when they do, certain of those items are not actually in the obligation. So if you'll turn to page 71, there's actually a list. And when they actually go in and do the calculation, they break it down. First one is difference between expected and actual economic experience. So they might have said, hey, we're going to get an 8% return on investment, and they've tracked it and they're only getting 4. So now they've adjusted the pension obligation up, and they've moved that difference into deferred inflows. Deferred inflows and outflows have been one of the most confusing items on the financial statements, but they're basically an item that is going to resolve itself over time.
You know, another example of this, and I'm not sure if I'm speaking accurately on this, but you know, each year we send in certain statistics on enrollment and other things called the legislative payment (LPE), and then at the end of the year, the state tracks how accurate that was and makes a further payment if we're owed more money. For example, I think it was last year, we had more students than what we turned in as our possibility, so we get paid for those in a settle up after that fiscal year is over.
Have we gotten the money?
I don't know if we've already gotten the money from the LPE or DPE. Yes.
Keep that or no?
Okay.
It goes back.
How much was
But
it?
in this case, so I know that I probably not answered your question completely, but it's all of those items relate to pension.
Okay.
The changes in the pension liability, which along that line, let me just help you. If you will go up to the top of that same page, 71, you can see that the total pension liability is 42.58 million. That's your portion. Okay, 22.4 of that additional belongs to the state. So they're basically saying that the total Pearland ISD current net liability for pensions is 65 million, of which 42.5 is on your full accrual financial statements. Just by the way, that's an increase of around 5 million from the prior year.
Right.
All from an actuary, this is going to sound negative, but all from an actuary doing a new calculation. It has a huge amount of fluctuation. The bottom of page 70 shows what a 1% change in the discount rate can do to your liability. It can go down to 22.8 or up to 66 million just by changing one factor in one calculation. So again, not meant to be negative, but it's just a number.
So how do we take care of that liability on a payment?
The only control that you have for the net pension obligation is to continue to pay whatever they're requiring you to pay, and you're making your required payments.
And that's the line item on the
Employee.
budget. It's the wash item that.
It's the amount you contribute per percent per employee.
Okay, that's a different thing then. That's,
So you're making your required contributions.
okay.
And so what these pension plans are doing, and you've seen this even prior to the new standard coming out where we're having to record this liability, is they are increasing those contribution rates.
Yes.
So there's two things that are really going on. One is they're going to continue to increase the contribution rates, and there's also going to be changes in investment return. We're getting better investment returns now that are going to cause that calculation to change. All out of your control. All you can do is just continue to make your same contributions that are required. There's
Yeah.
no other control you have over that number in any way. There's
Charles.
nothing you could do differently to cause it to change.
It's okay. That's that's the state's portion. Ours is a
Was
different.
6 million?
Okay. No, it's
What are you talking about?
a couple $100,000.
It's in here somewhere.
Difference
I don't remember
between-
where, but the amount of the state, the amount that the employee pays, or the percentage, and the amount that the
6.8%.
Yeah, 6.8 is the contribution that the state makes.
The member of the plan makes a 7.2,
Right.
and the employer makes a
Yeah.
6.8, and the state makes a 6.8.
Dr. Kelly, do you know, on note 9, on the same page of 71, you know, when we have an expense of 5.4 and receive a revenue from the state of that pension of 6.1, do we send the difference back, or does that
No.
We're, no,
We have a recognized pension expense.
Yeah,
of
and
five-
again, and also the pension expense number that's recognized
Yeah.
is derived.
Okay.
It's not actual funds going out.
Okay,
Okay.
so it's a derived number.
It's a derived number from the change in the pension liability.
Okay.
So if the liability goes up, you're gonna have an increase in pension expense because it's
Okay.
a payable. It's not, nothing's been paid. Your actual contributions are actually part of the calculation and they are expenditures when you pay them.
Okay,
This is just saying that pension expense on the total full accrual financial statements this year was 5.4 million. That's basically the amount that your liability went up.
increased, okay.
Correct.
Okay, and so I pulled up the current budget, and there's a revenue portion of TRS on behalf of benefits that's $358,000. That's the state's piece, right? And then we have a matching expenditure number, so that's just a wash. But like you said, our number, we make our, I guess, our scheduled payments into whatever the contribution is.
Correct.
But that 5 point whatever million is, like you said,
Yeah,
it's a
and
derived
if
number.
you were in the case, and I don't know of a school district that is, but there are other government entities that are in this case that are not making their required contributions, then they have a separate liability on their financial statements apart from the pension liability. You don't have that. You're meeting all your obligations. And that's one of the problems with the standard is the entity by which it's being reported on has no control over the number. There's nothing you can do to change it, positive or negative. If someone else tells you that they can, then call me because I want to understand that there's just not a way you can change it.
So our payments, again, excuse me for it, our payments, do they go out every month? Okay, and so, okay, but that number is not, that's not a budgeted number, right? I mean, meaning that that's not in the budget?
Yes.
It is? Oh, I guess it's part of that, the big ones, okay. It's not, it
Yeah.
doesn't have its own line item. Okay,
Charles,
it's in there, okay.
I was looking for this. Another way to look at it and understand, if you look at page 68, and you'll see the different contribution rates and percentages there in that table in the middle of the page. And you see that we contribute, meaning the employer, the member contributes, and the state contributes.
Okay, and so now I see, okay, what the number is, but my question was, it wasn't broken out on the budget on its own. It's in the, okay, so.
That's right. Good questions. Very good. While we're on this topic, to even further confuse you, there's a new standard that's going to be implemented one more year after this, which is going to put on your full accrual balance sheet all of the post-retirement benefits. So all the health insurance that's provided to retirees is not currently a liability on the balance sheet. We have not seen what that number looks like. We have heard that it's a multiple of 3 to 5 times what the pension liability is.
What does that really mean? Why is that relevant to the district once they retire?
It's back to it's the same concept as pension, is that somebody's going to do an actuarial calculation based on numbers of retirees, what their age is, what the expected health care cost is. There's going to be an inflation rate. I mean, all these factors go into it. And then they're just going to apportion it out based on what your current year compensation is versus everybody in the state's compensation. You'll get your portion of it based on current. So again, we can argue whether it has any benefit to the financial statement reader, but it's definitely going to happen, and it's already a standard that's been issued. We're waiting for somebody to give us some preliminary information so we can see what the impact is. The way that I relay this to any board of a governmental entity is that the primary use of that information in the full accrual financial statements is for your bond rating. Okay, because they're comparing you as a governmental entity to other bonded entities who aren't governmental, so that's why we're getting it from a fund basis to a full accrual basis. And that people who are doing those bond ratings have always been accounting for net pension liability. It's always been a disclosure in your financial statements. It's just not ever been on the financial statements. The OPEB, or the post-retirement benefit accrual, has not ever been disclosed in the past. No one's ever seen what that number supposedly looks like. Non-governmental entities already have that as a liability on their balance sheet. So our expectation is that these numbers, which you have no control over, will just be new numbers on the financials, will not have any financial impact in regards to bond ratings or anything of that nature. Any other questions on that? That was good. I'd like to talk about that for a couple more hours. Page 78 is the general fund actual versus budget. Just want to point out that no issues with expenditures exceeding budget in any function. General fund, good job on budgeting. Budget amendments to ensure no issues there. And there are some new schedules which will eventually have 10 years of data, some of the things we were just talking about. You can see with the pension liability on page 79, started out being 16.2 million. Then they said, oh, we didn't get that right. We're going to recalculate it for 37.6 million. And now it's up to 42.5. So take it for what it's worth. There are schedules in here that have every fund of the district, so you can see a balance sheet and income statement on the fund basis for every fund in the district. There is a budget to actual comparison for the food service fund and debt service fund as well. And lastly, I want to just point you to the federal award section in the back. And just to let you know that there's 2 letters that come from our firm that are in this section as required. One is a letter on internal control over financial reporting. It describes what a deficiency is and the levels of deficiencies, and then it goes on to say you have no deficiencies that are reported as significant or material. So it's a clean letter. The second letter is a letter on compliance with major programs, federal programs, and it also says there's no deficiencies and that you are in compliance with the programs which were tested. Page 101 then just goes into detail and describes the actual programs that were tested in the current year. And just to remind you, those are on a rotating basis. We have to have 25% coverage of all federal funds, and every major fund has to be audited at least every 3 years. So this just gives you an idea of which ones we actually looked at in the current year. Last and not least, there is a letter in the back, what I call the Enron letter. It actually came from as an outlay from Enron and became a new auditing standard where auditors are required to let the board know specific items that are in that letter. And basically that letter is clean. It says we had no issues to report, no issues with management. We did have some audit adjustments that ultimately determined not to be material. Client is making those adjustments to the financial records, and they're reflected in the financial statements. So with that said, any other questions, I'd be glad to answer those. Again, we appreciate not only the finance organization, but everyone that we encounter here in our audit, and we hit quite a few places throughout the district. It's important to us that people at least just pay attention to us and give us the information we need so we can get out of their hair, and they do a real good job of that. We get no negative pushback in any place that we go. Believe me, in some organizations we get a lot of negative pushback. So.
I'd like to make a motion.
I got a couple questions.
Questions
Yeah.
first. Questions.
Thank you very much. We appreciate the detail, Mrs. Carter. Thank you very much for the your notes that went along with it. And so the questions I had, I tried to answer in the notes. So if I missed something, please just refer me there. But I had a question on the change in net position versus the change in the general fund.
Okay.
And you mentioned that the net position is up $5 million, and the general fund is up about $1 million.
Correct.
So if I want to say what type of surplus the district operated at, is it the $1 million or
Correct.
the $5 million?
It's the $1 million.
It's the $1 million.
Because again, the fund statements are how you operate in the district, and the fund statements are basically how much revenue did we bring in, how much did we spend. Just not to bore you, but there is an actual schedule on page 34 and 35 that gives you the total change from the negative 10 million of fund balance that went down. Every item that's different between those two statements, and we don't need to go through that, but point being, to answer your question, you should be looking at the fund statements. That's how you budget. That's revenues and expenditures. That's not all the various accruals and depreciations and things like that.
And some of that change in that position is also due to the decrease in or paying off liabilities.
An increase in pension
Increase in
obligation.
obligation,
That's the primary
right.
difference.
Okay. On the net position in capital assets,
Mhm.
I was looking at, we have about a $22 million, I think, line item for the land. I was just curious as when did we appraise the value of the land?
That land is at original cost.
The original cost.
It does not get
so it's
marked to market.
We don't get the mark to market?
No.
Okay, so.
No
all
mark to
right.
market, no
Okay.
Enron accounting on that.
No, okay, all right.
You know, no, that's original cost value. All of your assets, fixed assets are at original cost less depreciation. In case of land, there's no depreciation, so.
And I was looking at the, I was ready for this one. I was looking at the statement of revenues for the different programs, and there was one item that caught my eye, and I wanted to make sure I was looking at the right thing, and I can't find it now.
Tell us what page you going
I'm trying. I thought I marked it. Let's see. Okay, help me out. The statement of activities or
Mhm.
revenues per fund. Which page
The
is that
campus,
on?
the
On
campus.
page
Not the
28.
campus activities, but just general.
Page 28.
28. There we go. Okay, thank you very much. 28. Okay, program revenues and under student transportation, we've got $2,600 there. That can't be the revenue that we charge for bus transportation, right? Is that tracked as a revenue or not?
I'd have to defer to one of you guys and maybe a follow-up question. I couldn't tell you that
Okay.
specifically to that item, exactly what it was
Okay.
generated from.
Okay, thank you very much. No problem. Yeah, because that's obviously not it, because it's $650 per kid, right? So
So,
yeah, that's obviously not it. And something like that. Yeah,
That's the change.
that's the change.
1 million.
Yeah.
Well, we're looking at program revenues, right?
Yeah, so
And so
that
we
column,
had
that
a- yeah,
that
we had
column
a-
actually starts, that's what, it is confusing. The expenses are first,
Right.
Yeah.
and then the
And
next
then-
3 columns are revenues that are
Exactly.
generated from those same activities. So
Okay,
that 2696 is revenue.
Okay, so I guess operating grants so we got a $255,000 number there in column that's labeled 4. But either way it goes, that was just a curiosity type
Mhm.
deal. Okay, and then the assignments is the last thing I had, I think. The assignments for the fund balance,
Mhm.
that's for federal grants. Those are obviously that's got to be spent where
Those
it's
are in
supposed to go.
restricted.
Right, that's restricted, right, by the nature of the funds.
Correct.
Debt service is restricted by the
Correct.
nature of the funds. How do we determine what's restricted in the general fund?
I think-
Okay, I'm gonna give a general answer, and Dr. Kelly can give the more detail.
Mhm.
The way the standard is written is that there's 3 categories, or 4. Restricted, which is by a program or something of that nature. Committed is you all as a board agree that we're gonna commit certain funds through a motion and passing it to something. The only way to get rid of a committed fund balance is to uncommit it with a motion or spend it on that. There's assigned, which the board delegated some time ago the authority to management to make assignments of fund balance. They can assign it to anything that they want to. And unassigned just means it's there. So with that said, I don't know that I could tell you off the top of my head right now what the assigned is.
I mean, honestly, I think Mr. Marshall had his own internal scheme about how to, label certain parts as we're holding it on for this or that. And I
Right.
don't know if he's
Okay.
ever even articulated that in the time I've been here. But I'll give you an example of one that I know of. If you remember when we sold the property across from PHS,
Right.
I think it was 2.6 million. The board said at that time, we want you to put that in a separate fund
Mhm.
and use it only for future land purposes.
Mhm.
So unless you uncommitted it for that, then that's where it
Exactly.
stays.
Right. And so that was. Yeah,
That's,
right.
see,
Okay.
and you
yeah,
do
okay.
have 7.5 million of committed for construction.
Okay.
So just to clarify in the world of government, so restricted funds are typically for our programs, title, that sort of thing. So when we committed that money for land, it's called committed. So we
Correct.
see the word committed, it's something that we've
That came from the
committed, so
board.
it's not restricted.
That came from the board, and
Okay.
again, the only way to get rid of
No,
it
it
is
is
to uncommitted or spend it.
Well,
Well, for the purpose of how, I guess, municipalities or governments label it,
Right.
we have to call it committed, not restricted.
Right.
Correct.
Okay, yeah. In other organizations, if the donations or other things are considered just all restricted. Yeah.
Thinking of I might be saying the same thing you are.
Yeah.
Restricted is a restriction that came from outside.
Yeah.
Committed is you put your own restricting on it from a
Right.
board standpoint. Assigned is management level designated it. That's how to think of the three differently.
Yeah.
Thank you very much. I didn't have anything further.
Good questions, thank you.
Any other questions, discussion? Okay, motion?
I make a motion that the audit of the 2016-2017 annual financial statements performed by the firm of Kinnemer, Masters, and Lunsford LLC be approved as presented.
Second.
Hey, I have a motion made by Mr. Bakken and a second by Mr. Gooden. Any further discussion, board? Okay, hearing none, I'll call for the vote. All those in favor? The motion carries 6-4, 0 against, and 1 absent.
One last thing, yeah. Georgianne Annie has developed a new publication that I'm just very proud of. She's put this together just in the
Yay.
last, her and her staff, and just gives a summary of our financial statement for the year. And this also will be on the web. There's a requirement to have your annual financials on the web. This goes a step further and makes it sort of user-friendly in
Nice.
addition to our audit.
Who's this going to?
This, well, it goes on our web.
It's on our website.
And we just wanted to give you a hard copy.
Okay.
It's just very nicely, easily done. Very well done.
That's something, could we promote that even further? I mean,
Tell people that it's on the web.
okay.
Yep.
Link and everything?
Sure thing's on it.
That'd be great.
Right.
I mean, you know, we're
You're
proud
gonna,
about-
social media, this,
Yes, yeah, we're gonna put that out on the website and then we'll do a post on social media for sure.
I like that. Yeah, that's good, because it helps,
It
helps the
me.
public, and it helped actually, yeah.
Helps
It's like a,
citizens like me.
you're putting together like talking points that we can put out on our own personal platforms. Just something easy.
We don't have a platform.
Where do you get a platform?
Not exactly.
It's called Facebook page. Right? Okay, and that's it, right? So this meeting is adjourned at 3:41 PM.